Good evening, guys. Thanks for your patience. This is Ken at Tortoise Capital on September 24th, 2020, with the nightly strategy podcast. So let's just jump into it and see what we got today. Excuse me. All right, so yesterday we had a rejection of price at the Dragon. We spent a lot of time beating that dead horse yesterday. And it closed near the bottom of the session, and it was testing a new 10-day and a 30-day low. And so we were really concerned that since it was already pushing Z3, that it wouldn't take much to get another great big day down and come down to test 310 and 305 and all that. And so what we got was a slight gap down and another extension down for a morning hook to come down and test the important level of 320. Now that was a price level that we had talked about over the weekend. We've been talking about this, collection of from 360 to 340, and this band from 340 to 320. There's 330 and there's 350. There's about 330. Here's the power of round numbers. Here's the peak of that Bollinger Band mean and tomorrow's PSAR, and pretty near the Bollinger Band mean for today, right around 340. And so here's that key price level now at 330. So these $10 chunks, look at that. I mean, that's hard to draw it better than that. There's 360. So each one of these is a $10 chunk. And we basically have come now from 360. Today came down and tested 320. So we're off $40 on 360, and that's 1/9, and that's 11%. That's how that works. So we're right at critical state territory here this is kind of the gateway drug to big sell-offs, or just a really scary roller coaster recovery, or a retracement, en route to a big move back up. And you can just kind of use these $10 markers as like 10-yard lines in football. So what we had today then was finding support at the long-term fair value, the RL270. So this thing has just been chunking along, slowly improving in this bullish market. And there was a time when this RL10 and RL270 divergence was at a maximum. That's like, as this keeps getting stronger and stronger, you start measuring that stretch of the short-term trader's price, which is this RL10, as it pulls away from the RL270. And that distance expressed as a percentage gives us a way to calibrate the strength of the short-term traders making directional moves away from the long-term fair value. So you notice the long-term fair value is slower to adapt and respond, and it's still kind of going up. It's starting to get flat a little bit, but there's a huge change in the RL10, but the RL270, all that has done is just slow down the rate of change a little bit, because you can see right about here, if this thing would have just been continuing on in the same direction. So now this is the amount of the slowdown from the RL270 projection to the RL270 actual. Now, by the same token, when you see this RL270 starting to flatten out, that's telling you that there's a change in psychology of the long-term buy and holders. That's the RL 270, right, in our model. And then the RL 30, which is the health of the trend. And then the intermediate one, this RL 90, which is the health of the next higher trend. You can see right around here is where that thing peaked and started to roll over. So it's starting to decay. So you can actually almost treat that like a blood pressure or a barometer or a EKG or whatever, the psychological state of different time frames as a function of the shape of the and slope of the regression lines. So I'm making the case now that this 320 really is significant. And what we got was a slight recovery today. It came back and reported in here. So we've got, I'm sorry, right about here. So we've got a nice little rebound, but all it did was stayed within the bounds of what you would expect. It's still south of the dragon. It's below the baby dragon. It's right on the marker of the RL10. And so all it did today was just not fail. There was no follow through on the fail. Yes, it did push the 10-day low and the 30-day low just a little bit lower from here to about there. But it could have been a lot worse. And the fact that there was no massive sell-off and that there was some broad-based strength and recovery is the first sign of evidence that that maybe it's not a runaway sell-off. But I'm cautious to say it's anything more than that, because it has to get through tomorrow, and we have to see what the what people want to hold over the weekend. So tomorrow, I expect the most likely case for tomorrow would be a tactical intraday trade with lots of volatility, and then in the last half hour or so, getting some kind of directionality. Now, here's a couple thoughts that I've been having on that. One of them is, with this at a critical state, right here at the fair value and poised just above the 30-day and the 10-day low. That with this at a critical state, we could still see a sharp rebound tomorrow, or a sell-off tomorrow, I should say. So this space between like 322.50 and 319.50, there's about a $3 window in here, which we could think of as a little pocket. So if this starts to fail tomorrow, I think you want to be short somewhere in this region, so that if it cracks below this 10-day low and the 30-day low, I would expect that move to be a sharp move down. So I want to have one position in hand, so that if I'm making if I've got my stop right about here and I'm short in here, then I can move my stop to no lose plus dinner for two while this thing is selling off harshly. And maybe somewhere in there I can get a second position in. That would be awesome. And then that's really part of the narrative of this runaway downward move that looks like this. And then that Z3 line at 315, is where you want to probably get a third position short. So I want to have one short in this pocket, a second short if it cracks below the 10-day low, and then a third one if it cracks the Z3 line. To the upside, there's a lot of work that it has to do. It still has to get above the high of the day. It has to break above, the RL10 price. It has to get above the baby dragon. It has to get into the dragon, past Z1, past the spine of the dragon, past the upper skin of the dragon. And so it's got a lot of work to do. It's got to get to 336. before you can even sensibly start talking about this whole price cluster being a support level. So it really has to get above this level. It has to get through that dragon and above this whole cluster. So if it can get up in here, then it's going to be good to go. Then it has to get through the Bollinger Band mean and the PSAR. This PSAR line is going to, we can just project that that's where the PSAR is going to be each day for, tomorrow, Monday, Tuesday, and Wednesday is going to be along this line. So we have to get above here, and we have to get through this space, and we have to breach that PSAR line. And then once we can do that, if we can get above the Bollinger Band mean, call it 340, then we're okay. So there's about just 20 miles of bad road between 320 and 340. It's 20 miles of bad road. The downside is easier to see, as I've noted there. Okay. All right, let's go take a look at the sectors. We played a U12 boys team, and they got a bunch of exchange students from Germany, and these kids are little soccer monkeys, and we thought we were just going to go relax and play a little keep away in possession, and man, they were all over us. Little soccer monkeys. Good times. I've even got my 12,000 steps in already. All right, so the S&P had a fractionally better day, even though it made a new 10-day low and 30-day low. It was up a quarter. And let's see what else we got in here. Treasuries were just fractionally better again at 0.38. The Russell was basically flat. So the Russell traders, the tactical U.S. index traders, the short-term traders, were not, and that's what I see the Russell as being, were not convinced. They were flat. And then the diamonds were just basically, in the middle at 0.2. So it wasn't much conviction to the upside. And again, the strongest case I think you can make for today, the optimistic case is, well, it didn't fail today, and it was slightly in the green. So it had an intraday recovery. So that is actually some signs of life. All right, let's look at these sectors. So finance was up 0.2. Tech 0.6. Oil exploration and materials up about 0.7. Here's our triple techs. Up about 1.45. Silver and oil up about 1.8-ish. Brazil, Mexico, and Wheaton up 2.6 to 3%. So there actually was some broader based support today. You got tech, you got materials, you got energy, finance. Didn't sell off at least. So this actually was not the case where tech leaders were just dragging everything else up. This has actually had some broad-based support, and now we can look at some of the individual companies. So with the S&P at 0.27, the best company, Goldman 4.8, Devon Energy 3%, Tesla and Nvidia in tech space are at 1.95 and 85. Microsoft, Virgin Galactic, Apple, Google, Intel, Amazon, all of the biggies There's even Walmart and Caterpillar. So there was much broader based sources of strength today, and because of the lack of the follow through the upside, I really just see this as um, some initial buying pressure on it when things are on sale for 10%. So there wasn't a runaway urge to buy, but it was at least enough to stem the tide of selling intraday. So let's take a look at the downside, what underperformed. In the sectors, we had energy and consumer discretionary were just fractionally down. Clean energy, Japan, clean energy, Japan, emerging markets, and healthcare down between 0.4 and 0.5. And that's really it for the sectors, you know. And so again, the S&P up a quarter. So the companies that were down big, let's start at the bottom. Nikola down almost 10%. Twitter down 4.8. I'm still bullish on Twitter because it was up so strong yesterday. Even a 4.8% pullback leaves it net up for the 2 days. Boeing and Cliff down 3.4 and 2.7. U.S. Steel given back. Cisco, Dow Chemical, or DuPont, I should say. Home Depot, Simon Property. So there was some significant give back on some of the big names we follow, but this was a better recovery day than Monday and Tuesday this week. So if we were to go back and look at Monday and Tuesday, these little rebounds off of 322, and which was the former Z3. This recovery and this recovery were fueled exclusively by techs. And then yesterday's crunch happened because all the techs got assassinated, and there was no other sector that stepped up to take the leadership position. But today, the buying pressure, which happens at the same price level as it did Monday, this buying pressure features a broader base of gainers. So again, energy, finance, tech, and then the tech was not just the new school big names, but also the old tradition, more of the traditional ones like Apple, Microsoft, Intel. So this one just feels a little more promising than the one on Monday. So having another move of the same magnitude as Tuesday would look something like this, you know. So this move could just very easily get to come on. This could get to like 329 pretty easily, and that's really where it runs into the first resistance of the southern skin of the dragon. So that's the first move that we got to watch for. Can it continue to gain to 329? If it does that, that's actually good because it takes out, you know, today's high. So that's really the first leg up. Is that can it make that move from 326 to 329? And that's about a 1% move. So that's half of an ATR. So you get half an ATR move to the high of today, and then another half ATR move to edge of the dragon. And then if it has to get to this price level to get above the 2-day high, the Z1, the spine of the dragon. So that would be the next, 331 is in play. And then it has to get out of the dragon at about 335. Okay. So that's the upside move, and the downside is pretty clear to see. Okay. That's that. So I want to go over one trade of the day. So yesterday was the massive goodness of 27R in Twitter using standard work for abnormal conditions. And today was Wheaton Precious. So Wheaton Precious got spanked pretty hard yesterday, which will happen. and so today was just a recovery from oversold conditions, setting up a nice intraday series. So I want to start with, if we just take a look at the size of the Z3 pinch from yesterday. That looks like that's about 30 cents in there. And so we used about 20 cents today from the breakout and the move off this was the move off the bottom, and a supported summer crossing. So what we have here just want you to notice. So you have the VWAP closed here, it opened here, it moves up in 2 bars quick and then sells off and basically finds support at Z-1 at the bottom of the river. And then the RL10 turns, crosses the baby dragon, crosses the VWAP, it turns briefly into winter, and then when it breaks out of the PSAR, that PSAR -1 that we like, this PSAR break is where I buy it right here. I'm using a slightly smaller wrist box. I'm using the PSAR, and that's about a 30 cent. Yeah, that's about 30 cents. And this moves out nicely. You get like 1, 2, about 3 wrist boxes to the upside. Comes back and finds support. It's running up between Z2 and Z3 the whole way. You get the crossover. Now, I wouldn't be offended if you took the exit in here and just cashed this nice move. I was using the VWAP. So if we're going to use that, I'm sorry, using the PSAR, I should say. Let's show the Wu Wei exit here, if we may. So we would start this cross. And then we're looking for the PSAR to take out our entry. So this is where the PSAR, let me get that out of the way so you can see. So we have 1, 2, 3 PSAR dots above our entry. So at that point, we would then just bring the sniper exit up and we move him up to here and then hold that in place until the Bollinger Band mean picks up the trail. And then the manager exit follows the PSAR to there. And then if you're using the sniper, you would just be having him come up and then your sniper exit. Would be here if you were using the sniper, and that's not that much different than what the manager gets on the other half of the position. But what you're doing with this exit right here, and to be to be fair, you might have, I'm sorry, it should have been here. What you're protecting, that one is a move down to the Bollinger Band mean or to the VWAP. So you're trying to protect against that adverse move, right? And so I want you to see the purpose of that. So that's how much you give back, and you're trying to protect against a loss of this much. Now, it turns out that you didn't need that. But you didn't know that ahead of time. So you end up giving back 1/3 to protect against a loss of an additional 2/3. Now, on this one, I've got the entry again, the second entry here, because what we had, in my view, was a nice recovery in wheat and precious, an orderly pullback. The PSAR didn't hit. It gives me a 1, 2, 3 recovery, and that creates a nice little pocket. If I could draw this. Yeah, there's a nice little pocket inside here that's formed. And so I like entering right in here as soon as it gets across the dragon, and I feel like I'm front running this move, right? So there's the peak of the RL10 and the peak of the previous price. So this entry here is the clear breakout, but I'd like to get about a 20 cent improvement on that by buying the cross of the dragon, like a 1, 2, 3. So I like getting that entry right there. And so if you take the sniper exit, you're fractionally in the money on that one, and you have a nice payoff. 3 execution R in the first position. I just used the manager today, and he ends up being that price. We get an orderly pullback. Fall becomes winter. I would not be offended on a short in here with the target of the VWAP and then the RL270, and then back down to the opening and low of the day. But this felt like a turnaround day today, so I just gave it some time and space, and it made a winter low, crossed the baby dragon, crosses the dragon itself, turns into the spring. So I buy it in the usual way right there. So we'll just craft the Wu Wei exit again. So this one is about a 25 cent initial risk. And this stays in place till you get like, call it 1, 2, 3 dots above your entry. And then I use that as the signal to move my stop to here. Because I'm a little later in the morning, I just go ahead and use the sniper. You could have used the manager as well. But again, as we were getting close to lunch, coming into the late morning and lunch, I just took that and got paid there. And I had some work to do at lunch, and so that's all I did for Wheaton today. So today was more of a quiet containment day, if I can say it that way. Finding support, no big runaway moves, but more importantly, no big sell-offs. So this felt actually almost like a pause to look around kind of day, a reconnaissance day. I expect there to be fireworks tomorrow, though, because it's going into a Friday, and we're still sitting on about an 11% sell-off from the high. So we're officially in a correction. And I don't know how many people want to buy new positions to hold them over the weekend in this kind of market. So I would expect there to be a run to the downside to see if they can push it lower. And then we'll see in the last hour how much conviction there is to holding over the weekend. Okay. So that's my take on it. I still believe this is a market direction, kind of a market, not so much a stock picker's market. Okay, alrighty. So we've seen the health check already. We remain in bullish volatile conditions that favors the short-term trader. We are still oversold in the short term, getting weaker in the longer term, getting closer and closer to sideways. The risk C is still slowly healing. The fact that this didn't sell off that harshly today, it only nudged lower in the early trade, is I still think is favorable. Handful of overreactions, handful of channelings, including the market itself, SPY. The best preservers of value here: Procter, Walmart, Microsoft, Merck. I'm liking Microsoft right now. 10-day max pain, the ones that are losing the most: U.S. Steel, Boeing, American Express, J.P. Morgan. You still got Simon Property Group down in here. Silver, metals and mining, and energy on the weak side. So that also says that there's room for them to have a nice rebound. So it could be energy's turn to make that little rebound. There's enough room to the upside for a measured move. In the ETF, still just about everything is on an auto framer. Tons of channeling and overreactions, as you would expect. 551W and EWJ, which could no longer hold on to its gains. Some small but nevertheless breakdowns in 10-day and 1 month in emerging markets: Japan, Europe, and healthcare. No other patterns really to speak of. Oops, sorry. The Dow Tactical next. Okay. Let me let that come up on your screen. Sorry. 6 dojis. Plenty of channeling and overreactions. When you see that many signals like that, that tells you this is more of a market condition rather than traders deciding to sell off individual companies so much. That's how I interpret that. Lots of triple screens and 551Ws on today's little recovery day. I always go study the 5DDs. That's Chevron, J.P. Morgan, which is also a 3.2 to 1, and Walgreens at 2.3 to 1. Had some breakdowns here. The biggest breakdown was in Boeing. As you would expect, there's a lot of things in the auto framer that fire. Here's one, Citigroup at 6.7 to 1, Altria 4.8, Silver, Healthcare, Gilead Sciences. Lots to choose from there. Just a handful of daily squeezes. I think Treasuries was was a solid gain today and low volatility, and that's feeling pretty stable right now, I would say. Come on, Kenneth. On the MACD Four Seasons, still being dominated in the Dow and the ETF 30 by the winter. Tons in the winter. Same thing in the Dow. Honeywell and Johnson & Johnson are holding up better than most, as are Japan and Treasuries, as we noted yesterday. So. Lots of symbols breaking down in the Dow compared to their 3-day look back, 10-day and 30-day look back. Amgen also. Nike and Goldman showing a little bit of relative strength, again, as are Treasuries. And then the breakdowns, emerging markets, Asia less Japan, Europe, and healthcare. Yeah, I would just say that maybe this is holding support here around 320. Maybe so. We shall see. Going to play it one day at a time, and tomorrow's going to be purely tactical for me. Under no circumstances am I going to hold swings over the weekend. We're just in the silly season for politics, and I want no part of that for overnight risk and over the weekend risk. And that's everything I want to cover on that. I just want to take a quick look at Treasuries if this will work with me. Yeah. Treasuries had a strong finish. And ever so slightly, ever so carefully, Treasuries are making their little move. So I take that as a healthy little sign right here. Now it's got to break out above Z1 to make me feel good. Last time it couldn't. It pulled back into that little channel. So that's going to be the tell for me on Treasuries. If it can stay out of that yellow box and keep going now. So I've got my weather eye on that. If there's further weakness in the equities, then I would expect this one to do well. Okay, guys, that's everything I got. We'll get this published and posted and give you some time to prep for tomorrow. Take good care.